Hey guys, what's up? Today I'm going to be talking about the future of this channel, and then I'm going to go over the order book and just maybe talk a little bit about that Bitfinex drama. I don't know that much about it, but it's pretty big news, and we usually don't get actually impactful news. It's usually just a bunch of shitty headlines about things that aren't really even true. So, for this channel, I want to make it about decentralized finance in general. Trading's fun, trading's cool. I'm super into finance, but I think this is going to be a dinosaur one day. This is not the best that Ethereum has to offer. And I say decentralized finance in Ethereum because all decentralized finance happens on Ethereum. There are currently no contenders. I'll talk about why that is in a video about fundamental analysis eventually, but it's all on Ethereum. There's cool shit. There's Uniswap that I want to talk about. There's Augur. There's Maker. There's Dharma. I think those are pretty much the big ones. If you want me to talk about another protocol in any of these videos that you can use to use as a financial tool. Oh, DYDX actually went live today. That's one I want to look into because that looks very interesting. From what I understand, you're actually going to be able to short tokens with that, which is fucking amazing, because if you want to use something like Uniswap, if you want to pool liquidity on Uniswap but you don't want to risk volatility, you can short the tokens that you're providing liquidity for with DYDX, and then you have effectively zero exposure to market volatility, which is fucking amazing. There's so much cool shit you can do with this. This is what your grandma would use. This is old school shit. We want to move into the future, but also we want to stay here because there's a fuckload of money here and we like money. So without further ado, I'm going to get into the order book. So you probably already know what the price chart is, what Japanese candle is, I hope. If you don't, just fucking Google Japanese candles. They're not very complicated. Here's the order book though. Okay, so the order book is a representation of all the outstanding market maker orders. These are all the sell orders, these are all the buy orders. Based on this, you can gauge how difficult it is for the price to immediately move in one direction. So you can see the cost here. It's going to cost me $15 million to buy 2,612 Bitcoins, which will raise the price. This will raise the price. This will cause a massive green candle that spikes up to like about here, above where the price chart is at now, to $9,000. It's gonna that will cost me $15 million. To drop the price to $1,000, that's dropping the candle to about here. A fat red candle that goes all the way down here would cost me about $30 million. So based on that, you can say that the price is going to go up because, well, it's harder for it to move down than it is for it to move up. And you're horrifically wrong, and you're being manipulated by the whales if you think that. This is a very easy trap for newbies to get into. I fell into this more than once. I lost a few $100 when I started trading, and it made me sad. I thought I was so clever. I was like, I would see a little blip like this and say, oh, except it's much bigger, because right now the market's not very active. There's no manipulation going on right now. There's no whales putting up fake walls. So anyways, you see a fake wall. Imagine it's way bigger than this. It's like 1,000 Bitcoins high, like right here, like boom, just Great Wall of China. I say, oh, this guy's buying 10,000 Bitcoins at 5,200. That means the price will not go below 5,200 until all those Bitcoins are sold, which they're probably not going to be because 5,000 Bitcoins is a lot. Wrong. That dude is buying those Bitcoins because he wants to keep the price high so that he can sell his Bitcoins at a higher price. Once he has sold all his Bitcoins, he will stop, he will remove that buy order, and the price will be in free fall. Think about it. if you really wanted to sell, if you really wanted to buy a bunch of Bitcoins at 5,200 and you were a mega multimillionaire, would you really just type in buy 5,000 Bitcoins? No, you would not. You would have a computer program that buys 100 Bitcoins per hour for a week or something, because you don't want to shock the market like that. When you put an order in this order book, you are revealing your hand to the entire world participating in this market. That is not a big deal for you if you're just buying half a Bitcoin at a time. But if you're a whale, it's a big fucking deal. So a whale, a sophisticated investor, a sophisticated trader, will hide their orders. They will have computer programs that automatically make those orders when the price approaches the price points that they want to set them at. And that's basically why you shouldn't trust the order book. The only time they show their hand is when it's advantageous to them. And if it's advantageous to them, it's disadvantageous to you. So keep that in mind. This entire game basically boils down to whales versus you. And the game is not just rigged for whales, okay? Everyone says, oh, the whales control the price. Poor old me. They can just dump the market. They can just crash the market whenever they want. No, they can't. If the market crashes, the whales have already exited. And it takes them weeks to exit. It takes a long time to sell off your position when you have hundreds of millions of dollars at play. It's going to take you a really long time to do that, because if you just do it all at once, market crashes instantly. And then once they've sold it all, they just stop supporting the market. So the game is not rigged against you. It's you versus the whales, yes, but you have more going for you than you think, and they have less going for them than you think. Because while, yes, they are capable of crashing the market or pumping the market, it's very, very expensive for them to do. It's not something that they can just do at a whim. So that's pretty much all I have to say about the order book. Don't look at it. Just keep your eyes off of it. The only thing you should ever use it for is if you see a whale with a giant sell wall that's close to market price and you want to buy a medium amount of crypto, say like $50,000 or more. I'm saying, I know that's a shitload of money, but like on a scale of like a lot of crypto being like a whale amount, like $100 million, $50,000 is pretty medium. You buy into their sell wall or you sell into their buy wall instantly, because if you just touch the buy wall, if you just touch the wall, it will disappear. I've seen many times where there'll be a sell wall that's like $10 away from market price, and then the market gets there and they'll just move it back by $10 because they don't actually want to sell you crypto. They want to scare you into thinking that they will sell crypto if the price reaches that point. They're full of shit. They're deceiving you. So with that, I guess we can talk about that Bitfinex lawsuit. That is very interesting. That's big news. It's definitely bad news, but I don't think it's as bad as the media makes it out to be. Yeah, it crashed the price pretty bad, but we've recovered very nicely. And a lot of people say it's like Mt. Gox 2.0. This is pretty much the only point I want to make about this. Is it's not even remotely comparable. Mt. Gox was just it was an infantile exchange. It was when the industry was just so small. It literally stood for Magic the Gathering Online Exchange, if you were around back then, or you know the history. Like, it was, you cannot even remotely compare today's crypto industry to Mt. Gox. That's just unfair. And even if Bitfinex is a sketchy exchange, there's more exchanges than just Bitfinex. Bitfinex cannot crash the market like Mt. Gox could crash the market, because there's 50 other exchanges to take its place now. Back then it was only Mt. Gox. So, yes, this is bad news. Yes, you probably could have shorted that. on the news, but I wouldn't risk it. The price is very low right now, especially for Ether. I don't trade Bitcoin. The price of Ether, we're at 158. I think I would be very excited to be able to buy Ether at this price. I wouldn't really think of letting it go until I am personally am not going to be intraday trading Ether until the price gets to 400. Because 150 is just too nice of a buy price. I've said this before. I'm not going to be, and this channel is going to get more active on trading when the price does get to that point, because I want to do some live trading. I think that would be super fun. I want to stream it on Twitch, live trading desk when the session is just crazy, like a 30% volatility, 30% swing. That would be that's pretty exciting, because honestly trading's pretty fucking boring except for those moments, and it's just like, it's intense, man. I would really like to share that with you guys, and my strategy for that is super simple. You can even follow along. It's basically just click semi-random places in the order book and wait for the orders to fill, because there's so much volatility. And it works pretty fucking effectively, surprisingly. So that would be really fun. I really want to do that. Anyways, that's all I have to say for this video, guys. Have a good one.